Choosing a nursing home is a big decision for seniors and their families. Nothing is more important than receiving the highest quality of care possible, but it can be costly. Planning ahead financially for the possibility of long-term care can make any transition go a little bit smoother. Of course, sometimes we forget to plan until we are faced with major life and health changes. Regardless of the circumstances, you have several possibilities that can help if and when it's time to look at nursing homes. Medicare notoriously does not pay for long-term care. However, it is possible to use Medicare for costs associated with some types of medical care received within nursing homes. If you have Medicare Part D, prescriptions will be covered. Also, a Medicare Advantage plan may help pay if the nursing home you choose has a contract with the plan. In limited circumstances, Medicare will pay nursing home costs in full if a doctor recommends a short-term stay in a facility for medical necessary treatment. Medicaid is a joint federal and state program for low-income seniors. It can be a payment option for nursing home care as well. The nursing home you choose must be Medicaid certified. Although eligibility varies by state, it is based on income and personal assets. It's possible for a senior to own too many assets to qualify and must spend down resources before Medicaid can be utilized. Whether you're self-paid or receive employer-sponsored health insurance, chances are your policy won't outright pay for nursing home. However, it is possible to have a portion of your services covered. Check your insurance policies. Though plans do not typically pay for long-term care, some policies will allow coverage for individual Medicare services. Health insurance almost never pays for personal care or living expenses. But sometimes health insurance will pay for skilled nursing or other types of medical necessities received in nursing homes like injections or therapies. Life insurance is fundamentally a contract between yourself and an insurance company, where you agree to pay a premium in exchange for a death benefit. Most commonly, the benefit that's paid to beneficiaries after your passing is used for funeral arrangements or debt payment. However, should a policyholder see fit, life insurance can be used in a few different ways to supplement paying a nursing home cost. Take out your life insurance loan. If your policy has a cash value, you could borrow from it. Policy loans do affect your credit score, and they are tax-free, making them a good method for quick cash. The loan will need to be repaid and with interest. However, rates may vary depending on your insurance company. Failure to pay may result in the policy lapsing. Permanent and whole life insurance may be surrendered for cash value. This means when you cancel your policy, the insurance company will write a check for any cash accumulated. This can be an attractive option for fast money, but it is important to note there are several downsides to this method. You could sell your policy. A life settlement is when you sell your life insurance policy to a third party for cash. This could be a private buyer or a life settlement company and may be accompanied by fees. Those fees will more than likely affect how much you're paid. Simply put, an asset is a resource that you own that has the potential to make money. Home equity is one of the most valuable assets an individual can own. It's defined as your home's appraisal minus your loan balance. Home equity and other assets could be used for quick cash in a few different ways. If you're trying to sell your home to pay a nursing home cost, but need immediate care, a bridge loan can be a temporary solution. Who says you have to take out a loan or sell your assets to afford long-term care? If you have a personal savings or retirement plan, that may be all the money you need. To plan ahead, speak with a financial advisor or seek out expert advice to ensure your investments are working for you. Long-term care insurance can help pay for care received in your home, a nursing home, an assisted living care facility, or even adult daycare centers. According to AARP, it is best to purchase long-term care insurance between the ages of 60 and 65. This way, you aren't paying for a premium over many years for insurance you may never need. Instead, you're purchasing it at a time when long-term care is much more plausible. Yet, you are young enough that premiums will be affordable. Though the average cost and payout for long-term care insurance will vary by lender and policy, you may expect an annual premium of around $2,000 with a benefit of around $165,000. Veterans who receive VA healthcare benefits can apply for long-term care services. An annuity is essentially a contract between an individual and an insurance company in which the person gives a sum of money to the insurance company to invest. In turn, the annuit is guaranteed monthly payments. The annuity has limited options for helping with nursing home cost. Paying for nursing home care doesn't have to be a burden for you or your loved ones. Plan ahead and visit your options as circumstances change.